Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Principles and Practices of Accounting. In this lecture, we'll continue with Accounting Chapter 4, that is Inventories. We'll continue with the multiple choice questions and we'll further do the important practical questions of this chapter. Let us continue. This is lecture number 8. Let's begin with the multiple choice questions. Let us see question number 1. Question number 1. The amount of purchase if cost of goods sold is 80,700, opening inventory is 5,800, closing inventory is 6,000, A 80,500, B 74,900 and C 80,900. We need to calculate the amount of purchase. Opening inventory 5,800 plus purchases, we don't know, minus closing inventory 6,000 equals cost of goods sold. Cost of goods sold 80,700. By backward calculation, we can find out the amount of purchases. Let's do it. Give it a try. So 80,700, by backward calculation, this would be added 80,700 plus 6,000 and minus 5,800. 80,700 plus 6,000 minus 5,800. The amount is 80,900. So the answer is C. 80,900. So the answer is C. Let us see question number 2 now. Question number 2. Average inventory is 12,000. Closing inventory is 3,000. Closing inventory is 3,000 more than opening inventory. The value of closing inventory would be what? So, average inventory is 12,000. Average inventory equal to opening inventory plus closing inventory divided by 2. So, over here, opening inventory is not there. So, opening inventory is not there. Say, for example, I will do it. Fine, so let us try to solve question number 2. Question number 2 in MCQ. So basically it talks about the average stock, the average inventory equal to opening inventory plus closing inventory by 2. So average inventory is given in the question, that is 12,000. Opening inventory is not given. Say for example, opening inventory is X, closing inventory is X plus 3,000, because it is 3,000 more than opening inventory, then divided by 2. So 12,000 multiplied by 2 equals X plus x plus 3000. So 24,000 equals 2x plus 3000. 2x equals 24,000 minus 3 minus 3000. 2x equals 21,000. X equals 21,000 divided by 2. So x equal to 10,500. X is opening inventory. So opening inventory equal to 10,500. Now we will find out what closing inventory. Closing inventory is plus 3,000. That means 13,500. 13,500. It's there in the option 2C. 13,500. Question number 3. While finalizing the current year's profit, the company realized that there was an error in the valuation of closing inventory of the previous year. What was the error? In the previous year, closing inventory was valued more, overstated by 50,000. Closing inventory is valued more. As a result of it, A. Previous year's profit is overstated and current year profit is overstated. Let's see the question once more. While finalizing the current year's profit, the company realized that there was an error in the valuation of closing inventory of previous year. In the previous year, closing inventory is more by 50,000. So if the previous year the closing inventory is more than 50,000, in that case the previous year's profit is overstated and current year profit will be understated. Obviously, we had learned that this concept. So previous year profit is overstated, yes, and current year profit is also overstated, no. B. Previous year's profit is overstated, okay, and current year's profit is understated, yes. So the answer is 3B. Still read the third option. Previous year's profit is understated, not possible, and current year's profit is also understated. Fine. So the answer is B. 3B. Fourth. Let's see the fourth one. Consider the following for Q company for the year 2015-16. Cost of goods available for sale, that is 1 lakh. Total sales is 80,000. Opening inventory 20,000. Gross profit margin on sales 25,000. So 25,000 on sales. This is 1 lakh. Closing inventory for the year we need to find out. So closing inventory of the goods for the year 2015-16 as A 80,000, B 60,000, C 40,000. Let us check and see. We are doing question number 4. Okay, so in this question, question number 4, total sales is 80,000 and gross margin is 25%. That is on sales. So cost plus profit equal to sales. Sales is 80,000, so this profit is 20,000. So cost would be 60,000. And over here, the cost of goods available for sale is 1 lakh. So the closing inventory would be 40,000. So the closing inventory is 40,000. C. Let us move ahead and see question number 5. Question number 5. Average inventory is 12,000. Closing inventory is 3,000. More than opening inventory. The value of closing inventory would be, I think this question is same. Question is same as question number 2. The answer is 13,500. Option is C. Option is 5C, 13,500. Let's see question number 6. If the profit is 25% on cost, then it is what? Suppose the cost is 100, profit is 25, it is 125. So it would be 25 upon 125, 1 by 5, 20% on sales. So the answer is C. 20% on sales. So the answer is C. Clear? Next question, question number 7. The next question is question number 7. Goods purchased 1 lakh, sales is 90,000, margin is 20% on cost. The closing stock will be, the closing stock will be question 7. In this question, as you can see, the sale value is given, that is 90,000. So 90,000 is 120. 100 would be what? From where this 120 came? Over here the cost is 100. Profit is 20%. Sales would be 120. So this would be what? So cost of sales equals 90,000 multiplied by 100 by 120. This is 75,000. So this is 75,000. Let's calculate the closing stock. So closing inventory will be purchases minus cost of sales. Purchases figure is given in the question. Purchases figure is given in the question, that is 1 lakh, equals 1 lakh minus cost of sales, that is 75,000. So the closing stock is 25,000. Closing stock is 25,000, that is C. 7C. Let's read question number 8. A company is following weighted average cost method for valuing its inventory. Weighted average cost method for valuing its inventory. The details of its purchase and issues of raw material during the week are as follows. 1st April 2015, the opening inventory is 50 units and the value is 2200. On 2nd December 2015, purchase of 100 unit at 47. 4th December 2015, purchase 200 units at 48. The value of inventory at the end of the week and unit weighted average is. These are the options available. We need to calculate this sum using weighted average method. We need to calculate this sum using weighted average method, and then we'll be able to understand that what is the answer. Question number 8. Let's write unit, rate, and amount. 50 units is there in the opening stock. The value is 2200. Then there is a purchase of 100 units at 47. So plus 100 at 47, 4700. Then issue of 50 units. So we need to total it, 150, 6900, 46 is the average. 50 is issue, 100 remaining, 46, 4600. After 50 units issued, 200 is purchased at 48. 200 unit is purchased at 48, 9600. So 300 units in total. The total is 14,200, 47.33. 47.33 average. Let us see the answer now. 14,247.33. The answer is A. The answer is A. Question number 9. Question number 9. The cost of sales is equals to opening stock plus purchases, opening purchases minus closing stock. C. Opening stock plus purchases minus closing stock. Obviously, the answer is C. Opening stock plus purchases minus closing stock. Question number 10. Inventory is disclosed in financial statement under what? A. Fixed assets. B. Current assets. C. Current liabilities. It is current assets. Inventory is a part of current assets. In the financial statements, in the statement of financial position, it's shown under the head current assets, the closing inventory. Question 11. Accounting standard do not permit the following method of inventory valuation. C. LIFO. LIFO is not permitted by AS2 accounting standard. Question number 12. Question 12. Which inventory costing formula calculates value of closing inventory considering that the inventory most recently purchased has been sold? Most recently purchased had been sold. FIFO, first in first out. FIFO, first in first out. Most recently purchased, sold. Question 13. Valuing inventory of cost or net realizable value is based on which principle? Cost or NRV, whichever is lower. This is which principle? Consistency, conservatism, or going concern? See, consistency can't be consistency because sometimes it would be cost, sometimes it would be NRV. So consistency can't be maintained. It is conservatism, prudence principle. Prudence principle. Question 14. Question 14. Under inflationary trend, which of the methods will show highest value of inventory? Highest value of inventory. FIFO, first in first out. Inflationary trend, when the price is rising, at that point of time, which method will show highest value of inventory? FIFO. Question 15. Which of the following methods does not consider historical cost of inventory? A. Weighted average. B. FIFO. C. Retail price method. Method that do not consider historical cost. Weighted average and FIFO considers historical cost. C. Retail price method. Retail price method. I believe you must have understood till here.